All right, welcome back to another episode of the Black Bullion Show. Next week, we have the start of the US earnings season. Now, investors have been enjoying the Dow hovering around 26,000, but second quarter results that we may get next week may catch investors off guard, which could be a nice boost to the gold price as well. We'll see as we have other data that we have to contend with next week as well. And though there will be quite a few moving pieces happening, that doesn't seem to scare some analysts away from saying gold is heading even further north into the 1800 territory. So let's see what they have to say. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more and more people into precious metals. Okay, so we've got another one from Kitco titled Record Highs in Sight. Gold on path north of $1,800 next week, analysts. So let's see what these guys have to say. Let's scroll down to the highlight here, and I'm just going to read this brief highlight here. Gold is going north of $1,800. And I quote, gold prices are heading further north of $1,800 next week, analysts pointed out. It looks like we are on our way to test those all-time highs around 1900, said Millman, adding that the new support level for next week is $1,800. All of the factors that were supporting gold a year ago are all still present. None have improved or changed. I expect gold to be higher going forward in the second half of 2020, he added. Gold's high of $1,921 from September 2011 is now in sight, said ABN AMRO senior FX and precious metal strategist Georgette Bowl. Against the dollar, gold's all-time high of USD 1921 is now within reach. The stars are aligned for gold prices to continue to rise. Aggressive monetary policy easing, ultra-low interest rates, negative US real yields, fiscal stimulus, and the technical outlook all support gold prices, Bull said this week. Another bullish call was issued by FXTM's market analyst Han Tan. Given subdued US real yields and the stubborn risk aversion in the markets, this is clearly a supportive environment for gold, with a repeat of the September 5th, 2011 record closing price of $1,900.20 in its sight. Melek is also optimistic on gold for next week. We are likely to test 1829 to 30 on futures. Wouldn't be surprised if we get into 1840s on weak data, Melek said. On the low end, Melek is watching 1790. The next resistance level for LaSalle Futures Group senior market strategist Charlie Netos is 1,830. I am looking for gold to push higher next week. Don't think we'll break the uptrend. Netos said the fear trade is kicking in and new buyers are turning to gold as part of their portfolio diversification during these uncertain times. Gold up 15% to 16% on the year. It is seeing a resurgence as an asset class. Traditional 60 to 40% portfolios, 60-40% portfolios are split between stocks and bonds. Now you are seeing precious metals work their way in. People put more gold into their portfolio mix. Just look at the ETF inflows. What I'm gleaning from that is gold um, is being added in portfolios for protection, Neto said. I think there's some typos in that last sentence there, but we've actually seen some of those talked about some of those inflows with that video we did yesterday with Peter Schiff highlighting the gold ETF inflows. So investors are looking at those. Now, in the short term, as far as next week is concerned, I can't make, those calls. There are things that look good for gold, and there are some things that could, keep gold around the lower edges of the 1800s. Now, as far as the term is concerned, I'm watching things like this, guys. I am watching uh, evictions and foreclosures looming. Now, this comes from Yahoo Finance, and this is something that I've been banging on about for a while now. But if it's one thing that will align the major equities indexes with Main Street, it's mass evictions and foreclosures, or if there are laws that prevent that, landlords not being able to service their debt to bank and non bank lenders. So let's get into it. Just have a really quick highlight here to read. A potential housing crisis is on the way for millions of Americans whose mortgage and rent deferrals are about to sunset. Evictions loom as the end of state and local moratoriums will no longer protect homeowners and tenants unable to make payments because of the Ronies. I'll just end it right there. A minority of U.S. states have already expired orders against evictions, and a host of others across the country are set to expire over the next 2 months. Once they do, residents are facing a possible flood of non-payment legal actions. Um, one other thing to note from this article are the FHA insured mortgages. Um, Now, those who have FHA insured mortgages were granted a moratorium on foreclosure. But apparently, those will actually begin to expire around August 31st. Also, some state and local governments that once outlawed evictions against tenants will soon expire their mandates. Some states like Idaho, Iowa, Alabama have already allowed evictions to resume. So I'll be keeping my eye on them. Also, Arkansas and Georgia never even had those moratoriums to begin with. So, guys, all in all, gold will face some battles next week, and who knows, it could head higher. But to me, what's more important on the horizon are those evictions and foreclosures that will occur. Why? Because eventually banks will be stressed, Wall Street will be hurting, and selling will occur because of this. Now, that selling will impact, in my opinion, those major equities, but it will also impact gold, it'll impact silver. Now, that may be an opportunity, or maybe the opportunity I've been looking for to start getting into some of these flash sales that I've been mentioning. Um, Now, again, I've been talking about the Maple Leafs for a while, but here's the thing. Um, I've been saying that the fall may be the time to pay attention to, but with these reclosures happening earlier than I've been seeing, with some of these moratoriums ending around that August time, with some of the PPP loans and unemployment benefits ending uh, now and even at the end of July, I'm starting to maybe even pull some of this back, a little bit, and we may start to see a little bit of the contraction happening even by the end of August. Now, what's interesting is that we usually tend to have some contractions or major economic contractions around October. But we've also had some periods of time when they've occurred in late August as well. Jim Rickers would be, one of the first ones to point out that, and I believe it was 1998, the long-term capital management fiasco first occurred in late August. So I believe of that year. And he was scrambling around to try to figure out that issue. He was a lawyer for that company at the time. So, you know, in my opinion, I'm going to stretch out that range and say things could start to shake around August. And again, I'm still looking at the fall as well, but I'm going to start pulling back and extending when this thing could start around that late August period. But let me know what you guys are seeing. Let me know what you guys think about gold, silver, when you guys are looking to get some more ounces. All right, guys, thanks again for watching. Please hit that subscribe button down below. Please hit the like button. It's Black Bullion.